next question, my dear soldiers, is that what are the procedures the statutory auditor can apply while applying substantive analytical procedures to obtain the audit evidence? So the statutory auditor will apply substantive analytical procedures. So what techniques he will apply to obtain the sufficient and appropriate audit evidence? Now in this case, please understand that there are 4 techniques which you have to highlight in the exam. One is trend analysis. In trend analysis, what happens? You compare the current year information with the prior period information. You compare the current year information with the 1 or 2 year prior period information. So what you see the movement of data for the current year is in line with the prior period information. Is it in the trend with the prior period information? So that is trend analysis. In simple language, trend analysis is nothing but like a variance analysis or a comparison method. Okay, you compare and you see that is there any significant variation. And then what you have ratio analysis. In ratio analysis, what happens? You will analyze the asset, you will analyze the liability, you will analyze the revenue, the expense account actually here. So see, individual balance, it's very difficult to predict. That is one thing. So what you do is that you always compare 2 or more items. Ratios like say GP ratio, NP ratio, current ratio. Okay. So ratio is compared over a period of time. That is one thing actually here. Our ratios is compared between 2 entities within the same group. Our ratios is taken for 2 different companies actually within the same industry. Okay. Either between 2 companies within the same group or 2 companies in the same industry, you do a comparison. Or over a period of time. Last year, what was the ratio? This year, what was the GP ratio? Last year, what was the GP ratio? Okay. The another method where you obtain sufficient and appropriate audit evidence by applying substantive analytical procedure is what? Come on, it is a reasonableness testing. Whenever you talk about reasonableness testing, what happens? Here, you review the relationship between certain account balances to check the reasonableness of amount. So, you review the relationship between the certain account balances. Now, in this case, what happens actually, you specially take the income items and you start checking for reasonableness. Example, say there's a link between sales and sales commission, sales and sales discount. There's a link between depreciation and fixed assets. Okay, there are links. There is a link between interest and interest bearing obligations, input to output ratio. That is what is reasonableness testing. And then you have structural modeling. This is a modeling tool which is which constructs a statistical model basically on financial and non-financial data of the previous period, and it will arrive at the current period numbers. It will predict the current year numbers. That is what it will do. So when we talk about structural modeling, basically what happens, it's a modeling tool which constructs a statistical model from the financial and non-financial data of the prior accounting period to predict the current account balances. That's the thing actually here. Okay, so these are the 4 techniques we apply for use it as a substantive analytical procedure to obtain a sufficient and appropriate audit evidence. Don't forget to quote SA 520 analytical procedures. Okay, I'll see you in the next video.